One Step Ahead by Lundquist and Beslik.
Welcome to One Step Ahead Radio, another session, another week. We've been away for a couple of weeks. It's summer holidays, vacations. Now we're back. James, Osborne and myself. James, welcome not welcome. I mean, you are co-host on this. So we did this together.
We can welcome each other.
Yeah, welcome, James. Welcome, Sasja. Yeah. So how are you doing? You good?
I'm good. I'm very good. Refreshed and recharged, and had a good summer break. So happy to catch up on what we've both been looking at and reading and analysing over the past few days. Keep everyone up to speed with what they're going to be thinking about, what the discussions are going to be focused on as we start into September next week. So officially looking at the autumn and rolling to the latter part of the year. So we've got lots of ideas and thoughts about ESG and sustainability, where it's going, what the developments have been that really interesting to sort of talk about and to dissect a little bit in our podcast today.
Yeah.
Have you been well?
Yes, very well. I've spent a very hot period of time in Tokyo, in Japan. It was unbearable. It was so hot that the authorities actually went out to warn people to spend too much time outside. And actually, for the first time, I think the Japanese government issued some penalty fees for companies not really taking care of their workforce working outside. It was unbearable heat. And I know it was and still is in many places in Europe, James. Spain, Portugal, I think Italy was part of that as well, yeah?
Yeah, absolutely. And I think one of the big trends from this summer, we've had over the last years, the constant headlines about this is the hottest since, or this is the second hottest, and et cetera. But I think what's changed this year has been kind of the public authorities' response, that it's got to a level in terms of working outside, risks to health. I mean, the first big wake up on that side was 2003 heat wave, and I remember the deaths in France, and that first sort of awakened people to the public authorities' responsibility on that. I think we've seen that again this year, as really across so many different countries. The heat means that companies as well, but also governments need to start protecting public health on this. So I think that's been a real switch from the usual, not just, it's hot again today kind of headlines.
Yeah. I mean, adaptation is going to be a big theme going forward. And given the fact that we are actually in so many ways beyond the mitigation sort of a capacity of our world to mitigate what we, think we could have mitigated before. But now it's all about adaptation. So how do we adapt to a very fast moving and fast changing climate and environment that is having a physical impact on companies, but also on the people? Now, it is atomic in many ways, James, and
yes,
on that one, maybe we can sort of dwell into the topic that I think have been around for recently for a couple of weeks, which is
yeah.
This
whole, everyone else, these last few weeks have been dominated by geopolitical updates as very frequently in these times, and talk of peace. Negotiations of some kind of form, and discussions between Putin and Trump in Alaska, but on that backdrop, still the whole idea that Europe needs to rearm remains very much in the public eye, and you yourself have been discussed in the media with a big piece in Bloomberg talking about. Whether, how much, and why ESG investors, above all in Europe, which dominates ESG funds globally, should be and are investing in weapons.
Yeah.
So, what was your response? I mean, when they came to you for a comment and say we're running this piece, what was your what was your take?
One of the takes is that this particular piece and questions were related to investments in nuclear weapons. And legally, investments in nuclear weapons are not illegal. So there is rather a discussion about morality of this. But, from the sort of a standpoint I have, sustainability is, of course, as far as it can come from development of nuclear weapons, because the underlying intention of sustainability to build bridges, dialogue, cohesion going forward, so we can challenge or take on the challenges together. It's really detached from anything that has to do with weapons. So in my book, as I sort of pointed it out in this interview in Bloomberg, the no harm principle, which is one of the core principles in EU legislation related to sustainable investments, can hardly be, complied with in terms of the further investment in nuclear weapons. But look, there are many people in Europe that are managing, investing on the umbrella of ESG that will think that my view on this is it's too pacifistic, and that I really don't understand the reality on the ground. And the reality on the ground is that we need to sort of muster all weapons we have to protect ourselves, and
weapons.
yes. I mean, the cynical thing about this is that imagine if we could have used, instead of 5% of GDP to support NATO development, if we could use that money to challenge or to tackle climate change and adapt our society to what is to come. But that is of course another discussion. James, for me, this is there is no correlation. There is no basically way how you can pack nuclear weapons or investments in nuclear weapons under the sustainability. Now, we'll see how the future looks like. I hope I'll be right, but you never know.
Yeah, no, absolutely. It really smacks of on one side of trying to bend definitions in order to take advantage of short-term economic and financial returns. This industry needs a lot of finance, needs a lot of money. It's the shares have been doing very well. So it's one of those things say, oh, well, it'd be nice if we could, and there's been this whole debate about changing, labels almost to talk about security rather than defense. Yeah. And so we're investing in security, which is a positive, or which is cast as a positive benefit for society, rather than investing in something that destroys. And also, I imagine that a lot of these decisions are subject to political coercion and moral suasion from respective governments and ministers trying to put pressure in order to. We've heard that even from, I think, the French government a few months ago, complaining why our ESG funds are a barrier to developing this necessary industry. But I think you're right in terms of you have to draw a line. This month has also been the 80th anniversary of the only use of the atomic weapons in
the history of humankind. Yes, and
that's right. Which seemed to clash.
Exactly, and being in Japan actually visiting Hiroshima is quite an experience, and which is what I said as well in this interview. Whoever wants to visit and really experience the no harm principle should come to Hiroshima and have a look. And there is also another thing which is very interesting, James, when we talk about this, which is the fact that there are very few pure play weapon companies you can invest in. Usually invest in the components or companies producing components. But if people really want to support European democracies to protect themselves, the people should buy government bonds of the countries that are biggest weapons producers in the world. On the sort of Western Hemisphere, you have US, you have France, you have UK. And these countries, by buying sovereign bonds of these countries, you can actually support that in a democratic way, instead of being exposed to component companies where you actually, in the end, don't know where these weapons will end, usually in the wrong hands from time to time. So there are other ways we could do this, but the debate is always on the edge in this context. Yeah.
Exactly. And even Sweden's a big your
Sweden
home
is
country.
per
It's a big
capita. If you
producer.
yes, if you look at it from per capita production, Sweden is one of the top 10 in the world. Country that was previously alliance neutral, as it's called, is one of the big weapon exporters in the world, which is quite oxymoron for what Sweden is trying to portray itself as in the world. Yeah.
Mm. But I think we'll see in the coming months what happens with the whole Ukrainian situation, which is a big driver. Some of the shares of these big companies have actually been going into reverse in the last few weeks, since there's now talk about potential ceasefires, or anyway cessation of hostilities, maybe not. But I think that might dictate where we're going rather than purely financial considerations.
But when we talk about this, what freaks me out, James, is the fact that pacifism as a whatever, the way of looking at the world is completely out. So,
Mm.
when you say to somebody today that I experience war myself, I really don't believe in the power of weapons and conflicts. I think there are other ways to solve it. It takes much longer time. It's much more complicated. But it's almost like nobody talks about peace. It's some concept that's been taken out of the equation right now. We need to come back to that. It will probably take time, but I think we're on a very, 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 very dangerous path. Armament across the world will just increase, and with that also the risk of somebody using it. So
Yes.
it's really sort of it's a tricky path that we are onto. Yeah.
Yeah, and I think ESG needs to draw a line in the sand, really, on these kind of issues, rather than bend with the wind.
Yeah. And it was James, about when we talk about different paths. I mean, you have these. It's been a lot of talk about the banking alliances and what's going on, and they are leaving, and Americans are leaving, now Europeans are leaving. What's your take on that?
Well, there's been more discussion about reviewing the structure, for example, of the Net Zero Banking Alliance, which is losing and keeps on losing major members. So news about pausing its activities in the meantime, because the beginning of the year, above all, we had a lot of Wall Street members walking away. Obviously, the political climate in the US changing there, but also now recently, top European banking institutions have been walking away. We've had HSBC, Barclays, and UBS as well.
Yes.
But what I saw at the same time, which I didn't really see the connection being made more widely, was a Bloomberg analysis by Bloomberg NEF, looking at the financing of the top 6 US banks to oil and gas and coal projects in the first 7 months of the year, down 25%. So they were kind of bringing this up as saying, well, actually, on the ground, despite the rhetoric and the maneuvering and the alliance or non-alliances, what's actually happening is that there's a trend away at the moment from in terms of their lending books, which is really where we need to be looking when you're talking about dollars being pumped in one direction or another.
Yes. No, you're completely right about that. I mean, look, there is a bit of a sort of a contradictory, because they are leaving the public sort of a communicated, committed alliances. But in the same time, the underlying price mechanism for renewables is getting more and more competitive. So, and there is also a premium in many cases to finance that for banks in various ways. So I think the rhetoric is one thing, but the things on the ground are completely different. Although you can see, in bits and pieces of the world, parts of the world, there is still a lot of pushback. I mean, Japan, just recently, I think it was today, the Mitsubishi, sort of one of the biggest corporates in Japan, had worked out on the further development of offshore wind, because they think it's uncertain, pricing models are unclear. It's not really related to rhetorics, it's more related to the pricing side. But you will see a lot of consolidation in renewable energy space going forward. A lot of sort of small scale wind and even solar will be consolidated into the bigger companies, I think, because the sheer sort of complexity of the pricing is actually very heavy on the smaller players. Yeah.
Yeah, and also we've had this month and this week and the last week dramatic developments in terms of offshore wind with Ørsted, the
Yeah.
Danish company, which a few years ago was the darling of renewables and an ESG, in fact, and a new way. It used to be the Danish national oil and gas company that transitioned completely into a pure renewables operator, very
Yes.
strong in terms of its advocacy, in terms of its positioning, and saying, we're ushering in a new era, and it's been forced to have a huge rights offering, billions of dollars, which 50% is still owned by the Danish state. So Danish state basically having to bail them out, mainly because of Donald Trump's administration attacking offshore wind projects and stopping offshore wind projects in the US, where there've been lots of these big projects on the east coast of the US to install these, and so that's put a complete downer on the whole offshore wind industry, because people are seeing who's going to be next, which projects is going to be next. So at the moment, we can maybe say that okay, there's less money going into oil and gas according to that analysis, but the alternative in terms of wind industry is pretty hairy for investors as well. And I think people are looking, it's really in the crosshairs of this geopolitical mix at the moment.
Yes, it is, and most of the money actually does not even go to that space. The most of the money right now being channeled into artificial intelligence and everything that has to do with it, which is probably one of the topics we should discuss in our next One Step Ahead radio podcast a bit more in depth, because it is a growing sort of debate about where we're heading with artificial or alien, whatever people call it, intelligence, and some people call it in various other ways. But it is a big topic, and investors are, like we have done before, in many parts, in the history, flocking around what they believe will be the next sort of evolution of investing and evaluations. So it's certainly a big shift happening on the market. And if you see the amount of money that is invested in artificial intelligence today, it's mind blowing. I mean, how much money it is.
Yeah, absolutely. We're going to have to add that to our list of topics to watch.
Yeah, we need to come back to that one. Definitely. Anything else you've been thinking about, reflecting over, James?
Yes, well, I've seen you've been making headlines again in the Swedish press, and some interesting research that I saw connected to that. I wanted to start with the article that you that together we've been starting to do some research that we're doing in terms of the valuation, stock market valuations of sustainability, and you had a big piece looking at the situation in Sweden. I don't know if you just want to wrap up briefly what came out of that and how it's been playing out.
Sure. I mean, one of the sort of Eldorados of sustainable investments in general, ESG, is about trying to evaluate or put the quantitative metrics on how much is sustainability done by companies actually worth in terms of the market cap of a company. Market cap being used as one of the more general sort of evaluation metrics for a value of the company. And what we've done is that, and it has been a very interesting piece of analysis, is to look at the way how the market cap of the companies on the Swedish stock exchange, 660, which is the biggest benchmark of 60 biggest companies, how is their market cap actually looking from if sustainability is weighted in as one of the component for the market cap. So the conclusions, James, as you probably know, is that 97% of the companies on the Stockholm Stock Exchange biggest large cap list don't get paid for sustainability. And I also looked at the way how the PE or price earning ratio is related to this, and its correlation is almost non-existent. So it means in practice that market is actually not paying companies for what they do, because in most of the time they don't understand it, and the companies are really not doing what they can to communicate value creation to investors. And that's basically the conclusion, is that there is so much money out there for sustainability that companies are not getting, because they are actually not really good at telling the story about what are the levers they are using on sustainability to impact financial performance. So yeah, it's been a big article, a lot of follow-ups on that. It's sort of a shaking a bit. Traditionally very calm. A Swedish market where sustainability is seen as, a beacon of good things. But then again, if you're a CEO, you have to ask yourself, what do we actually get for it? And
how can we leverage that? Because what comes out of all of this is a very strong message, both on the investor side, but also on the company side, in terms of investors, in terms of obviously how can they always seek, green alpha or ESG premium opportunities, how big that is. Obviously, that's an ongoing discussion about how well they're able to identify those opportunities. But I think, really big, important message to companies in terms of how they tell their sustainability narrative to not just to investors first and foremost, but also very often to customers and clients. It's seen as a kind of a corporate sort of HQ reporting and risk management process keeps the ship in order. But what this analysis comes out and saying is like there's a big opportunity if you can transfer that into your business drivers, into your financial performance, into your products and services and what you're actually selling, what's commercially driving the success of the company. And that's a story that everyone is going to want to hear, both inside and outside the company.
Yes, and I think we've been talking about this before, this new next phase of sustainability. In general, it will be all about what is your value proposition? Why do you want me to invest or buy something from you, given that you actually do work with sustainability? How is that part of that equation on valuation side, value prop? So companies and sustainability, heads of sustainability, investor relations all over the world will need to be able to answer these questions, because the compliance-driven part, it's going to stay there, but it's actually not creating value in that sense. Yeah.
And we're following up on that research and analysis you did on the Swedish market with a similar analysis that we're preparing for the Italian market, which is obviously our Lundqvist's home market, but also the Swiss market where we operate and have operated for many years. So it'll be good over time to start comparing also geographies and sectors, and to see how this plays out. The more data we get and the more analysis we have, that it becomes relevant, obviously, industry by industry and country by country, and see where the trends are, where there's more underperformance and undervaluation of sustainability compared to others. So, but it's certainly a big, strong call out to companies to start to sharpen their thinking and their communications around sustainability, or even on a strategic level, just rethinking what the real drivers are for the business.
Yes, and I think, what exactly are they selling on sustainability? I would like to understand that much better than I do today. Although I've been spending 25, 30 years in this space, I still don't really always understand what exactly are they selling on sustainability? Why should I buy it? And, James, I think education is, under sort of a prioritized part of the sustainability. Companies will need to spend much more time on really explaining the story, why and how they work with this. But maybe we can touch upon that, and I will, in a week's time, have a analysis done on Switzerland. We've done Italy. So, going forward, we will be able to share some of these things with the audience listening to One Step Ahead Radio.
Yes, absolutely. We've got lots more to talk about for the rest of the year. So keep tuned, keep listening, follow our Spotify podcast, And we look forward to being in touch and updating with you very regularly. Sasha,
Yes.
it's been great. It's been interesting.
Always pleasure and always interesting. And hi to everyone out there listening to us. And thank you for doing so. We'll be back next week with a follow-up pod and hopefully with some also interesting news. Thank you very much and have a great weekend.
Thanks, everybody. Bye-bye.